you're with us, let's talk about a stock that's going to be in focus today, right? And that's Vodafone Idea, because it's got a board nod for fundraising of up to 45,000 crore rupees through equity and debt. Now, the company will hold an EGM to get the shareholders' approval on the 2nd of April. But Samit, what are the implications of this fundraise? What are the key challenges? Take us through that.
Well, the recent announcements that have come in Vodafone Idea is the fact that the company is looking for an equity fundraise of close to 20,000 crore rupees, and also they're engaged with multiple banks for a tie-up for debt funding also. Now, overall, they are looking to raise close to 45,000 crore rupees via equity and debt going forward, and they will be holding a EGM, that is the extraordinary general meeting of the shareholders, for the approval of this on April 2nd, 2024. Now, promoters would also participate in this proposed fundraise as they had committed earlier, and these funds would be used by the company for significant expansion of 4G, 5G network rollout and for capacity expansion going forward. Now, what does this fundraise mean? In practical terms, this fundraise actually means nothing, because the company is just enabling a resolution to raise these funds, as they had done there earlier also. In September 2020, they had enabled a resolution of around 25,000 crore rupees. In March 2022, they have enabled a resolution of close to 10,000 crore rupees. However, the company has so far failed to raise funds from any external investor so far, and this is just an extension of the earlier enabled resolution, and this time the resolution is for 20,000 crore rupees of equity fundraise, and an actual fundraise could be still some time away for Vodafone Idea going forward. Now, why the fundraise could be a challenge for Vodafone Idea? Because if you see the current market price of the share prices are currently 15.9 rupees, while the government was issued shares at a face value of 10 rupees per share. Now, in case a company even goes ahead with a QIP and preferential allotment, the pricing of this allotment would be determined on a predetermined formula, hence which could be higher than the face value, and this could discourage any potential investor who's looking to put in funds in the company. Hence, most likely a fundraise could be challenging for the company going forward. The company could, however, could decide to go ahead with a rights issue, because at that time the company could keep the pricing as per their terms, and that could be near to the face value. So, rights issue could be the only way ahead going forward for Vodafone Idea for a fundraise. Apart from that, fundraise still looks challenging for the company.
All right. So